Hey, what's going on, everybody? It's Matthew Nickerson. One of the things that I really like to look into is not only economic analysis, but I like looking into financial analysis and seeing the future, sort of a futurist in the sense of planning accordingly and how our future is happening before our eyes. The concept of tonight's video is why the average person is becoming poorer over time, the melting ice cube. Now, I'm going to be talking to you about a few different points. We're going to be talking about inflation. We're going to be talking about the difference between owning assets and owning cash. And we're going to be talking about different trends that are being noticed from the millennial and Gen Z market, as well as previous generations before us, and how this impacts us in our everyday lives. Continue to follow through, and please let me know what you think. So during this session, I'm going to have sort of a stream of conscious approach to this as I just kind of let a couple concepts out. But this is going to be something for everybody to understand. One of the things that I kept hearing in the end of 2020 and the start of 2021 is, why is everything so expensive? Now, beyond a supply chain approach and looking at the cost of bringing goods in, I want to talk about a different concept tonight, and I want to talk about how the money supply, as it increases, devalues the actual currency. So previously, I've talked to people about how the average person, the average American, about 67% has less than $1,000 in their bank account. Now, beyond the saving issue, even if you did save money, I'm going to talk to you about why this is a melting ice cube as we are approaching the next couple of years and quantitative easing that's going on right now in the Fed. So one of the things that we notice is that during the pandemic in 2020, there was a lot of stimulus checks that were given out. A lot of people were kind of handed money due to the economic uncertainty and the difficulties that many were going through financially. I can attest that many people around myself and people that I've talked to faced hardships depending on what industry they were in, whether they were in the hospitality industry and those kinds of things. Now, what I will say is, I want you to think about this. Why is it that there is the 1% in this country? What is the difference that they're doing that is far different from your average everyday citizen? So let's say you do have $5,000, $10,000, $20,000, $30,000 in the bank in a savings account. With this concept, you'll be able to understand why over time that money will become worthless. Now, last year, when there was a printing of money at the Federal Reserve, there was a debt that was put on the balance sheet of the Federal Reserve, basically giving people $1,200 stimulus checks. Now, this was money that was printed and was given out through checks. And one of the things that I want you to think about is, when you went shopping, why is it that everything became more expensive? This wasn't taxes. This wasn't necessarily supply chain at the time. This is, why is the body wash that you bought from Axe in 2010 when it was $2, why is it now $6? But I'll explain this to you. If the stimulus checks are given and everybody in your township, in your city, now has $1,200 to spend, then everybody can go and buy toilet paper, can buy Axe body wash, can go and buy food, can go and buy different products from shopping malls. And what ends up happening is it bids the price up because of supply and demand. Now, over time, when you have an excessive printing of money, the value of that money starts to decrease. So as debt levels start to go at an all-time high, you need more and more money to buy certain items. Now, economists and financial people in the industry will look at a number called the CPI, or the Consumer Price Index. And what that is, the CPI is basically a measure of a basket of goods. They might put rent, oil, wheat, corn, different things within a basket and judge it over a length of time. Now, let's say the cost of oil in 2020 is $80 a barrel, and then in 2021 it's now $130 a barrel. Let's say rent is $1,200. The average rent in America is $1,200, let's say. And then in the next year it's $2,000. What the CPI numbers do is it gives people an average on the cost of everything and how they're moving over time. Now, Jerome Powell and the Federal Reserve this year will say that it's transitory, meaning that it's just inflation for the current moment. But what's really happening over time is as there's more and more debt that's being taken on at the Federal Reserve, as there's more money printing, your purchasing power is becoming less and less. And people are starting to wake up and realize that if their wages don't increase like they haven't annually for the last 30 years, there hasn't been a adjusted medium wage or a wage increase, and then the cost of goods are increasing and the cost to supply them in the stores is increasing, and you're getting hit with taxes, the average person who has money in their account to spend is spending more on goods, more on gas, more on the price of a used car. And what ends up happening is that $5,000, $10,000 that you're saving in your account is actually over the next 1, 2, 5, 10 years becoming worth less and less. So what do you do? And what is the 1% doing that's different from the rest of this country who can either barely save, are scraping by, or are just saving on to tons of cash? The 1% are investing their wealth into a few different things that are allowing their money to appreciate, to beat inflation. One of the most notable ones that most people think about is the equities market or the stock market. And what they've noticed is over time from the 80s and 90s and 2000s and since the beginning of the markets, the money that they're investing into companies that are growth stocks, such as a Microsoft, a Google, an Apple, Coca-Cola, Home Depot, these are things that investors are putting into their portfolio and expecting a return based on what they're seeing from the company's performance. So if you invest in an ETF or the Vanguard or a mutual fund or individual stocks, you as an investor are looking for a return on your capital. I am investing in the company grows, I make money, and I can sell the stock at any moment, whether it's at a loss or a profit, but most people are in it for a profit, right? The other things are things like foreign exchange. They're getting involved with trading the money from foreign countries comparative to their domestic land. Such as the United States, and you're trading the British pound or you're trading the Japanese yen. This is something that people are making money off of, and they've been trading currencies for years. Then there's bonds, then there's crypto, then there's real estate. There's a lot of people that have used real estate as an outlet to make money and also to make money back that's residual income month after month. So let's say I'm a wealthy person. Rather than having $200,000, $300,000 in the bank, I can go buy a property and for 10, 20, 30 years rent it out to a college student. The college student pays my mortgage. The house then has the equity in it. I pay off the mortgage and I can keep renting it, or I can sell the house. And these are ways that the rich and the 1% have been able to make the most money, because the cost of houses over time has gone up steadily year after year. Now, there's been some recession, some ups and downs like the 2008, but for the most part, those that invested in real estate have been able to do a very, very good job and have been able to beat out the inflation, and they've been able to make a steady stream of income. Same thing with stocks, and we're seeing it in crypto right now. People are finding ways to put their money into a vehicle in order to make more money. Because the melting ice cube that you're seeing in your everyday life, where your money is becoming worth less and less, we're not talking about just taxes. We're talking about the prices of everything, the price of a home, the price of the food that you buy at the grocery market, the cost of going to see a movie, the cost of taking a vacation. Everything around us is going up and up and up in price. Whereas average wages haven't really seen an increase comparative to these costs, such as the cost of college, the cost of home ownership, the cost of healthcare and going to the doctor. So these are the reasons why the average person is getting left behind year after year after year. And there's so many stresses and hardships that are going on, but at the same time, those who understand the concept of cash is trash, it's really a concept of you need to own assets. You need to own things that are growth and not have all of your cash just sitting in a bank. Because cash that's sitting in a bank goes nowhere. It's great to have, such as an emergency fund. It's great to have in case you want to go on a nice trip. But the real growth that is happening amongst the elite, the top percentage of Americans that are making good money and putting their money into investment, this is why they're able to outpace the rate of inflation, and where the average everyday citizen is getting hurt in return. This is really the concept that I'm trying to get at. The reason why it feels like so many people are going through such hardships, even those with good jobs making $30, $50, $70, even $100,000 a year, if their money is not making them money, if they are not investing their money over the long term in mutual funds and real estate and bonds and stocks and crypto and art, which is what the 1% do, then you're getting hurt in the process. Those who own assets, those who buy a franchise, start a business, start investing into all of these different avenues, those are the people that are able to beat the melting ice cube. Because your 10,000 today is going to be worth 1,000 10 years from now. Or it might seem like that. Because every year that goes by, the cost of rent is just going up higher and higher. But your wages aren't beating that. So what do? You have to think long term. You have to outsmart the system. You have to put your money into avenues that are going to beat the devaluation of a currency so that you can be ahead of the curve and that you can live comfortably in the years to come. In order for the millennials and the Gen Z to be able to retire, we have to start thinking about this now. We have to start thinking about business creation. We have to start thinking about assets. We have to start getting away from liabilities and debt and credit cards and all of the easy things that are taking the money away from us and furthering us into debt. I haven't even started to talk about the debt, corporate debt, personal debt that is consuming us. Student loans, credit cards, all of the things that we see out here, auto loans, mortgages, and all of the things to put you further and further behind into massive amounts of debt and not getting you ahead in life. This is why a lot of people around our society are broke, and they're constantly thinking about how they're going to make money, and they're constantly stressed. And what they don't realize is the people that are making the most money and the people that are the smartest with their money are investing in the assets. They're not investing in cars. They're not investing in clothes. They're not investing in things that aren't making them money in the end. Start thinking about this. Get away from depreciative assets and start investing in things that will outpace inflation and create a money-generating avenue for yourself, your family, and your future. This is Matthew Nickerson. I hope you liked this material.